Hi, this is Lara at Elliott Wave Forex with a free US dollar index Elliott Wave analysis for you for the week ending Friday the 7th of January. Before I jump into my daily chart, this is a quick look at a weekly chart going back to early 2008, and this shows the waves at primary degree for my main wave count. And this is all within a cycle degree wave C to the upside I'm expecting. I expect we've had primary 1, an expanded flat ABC for primary 2, and working on primary 3 to the upside with an intermediate 1, a very deep intermediate second wave correction, so we should be expecting quite a long third wave at intermediate degree, maybe longer than 1.618 the length of 1, so my target for 3 black may have to be revised upwards. And my target for primary degree wave 3 to be reached possibly in a year or two is 102.87, where it reaches 1.618 the length of primary wave 1. We can draw a trend channel around intermediate degree wave 2 to the downside from the start of A to the end of B in a parallel copy placed on the end of A, and we can see a very clear breach of this channel to the upside now, giving us some pretty strong indication that this downwards trend for this correction for intermediate 2 is over and the upwards trend for intermediate wave 3 is underway. When price moves above this point, we'll have more confirmation that this downwards wave was over and it was a 3-wave structure, and the upwards trend should subdivide into a 5-wave impulse. And that will put a huge doubt on a couple of my alternates that would have to see this as a continuing impulsive structure to the downside. Because if that was the case, we would have a 1, 2, and then within 3, 1, 2, and 2 can't move beyond the start of 1, so that would eliminate any third wave extension unfolding to the downside. And at this stage, it's looking extremely unlikely, because you wouldn't expect right within the middle of a third wave to have such a very deep correction, although it would be possible and would be eliminated above that point. So taking you now to my daily chart, where this 2 black and blue C down here is this point down here, and this is our recent upwards movement. I may revise this degree of labelling all down 1 degree in future. We'll see how this one unfolds. If this third wave turns out to be very extended, and with this target for it I think is quite conservative, it should probably be higher than that. If it turns out to be very extended and does breach above the target, then this degree of labelling may be correct. I see a 1, 2, 3, 4, 5-wave structure up here for blue or minor 1, a double zigzag, ABC for W joined by X, ABC for Y to the downside for blue 2, and expecting that we're in blue or minor wave 3, within intermediate wave 3, within primary wave 3 to the upside. Any further extension to the downside at this stage of blue 2 cannot move beyond the start of 1, so the invalidation point on the daily chart is at 75.631. When upwards movement above this point here, 81.444, confirms that blue 3 is underway, at that stage I'll move the invalidation point on the daily chart to the start of blue 3 just down here. For now I'll leave it down there, because blue 3 has not been confirmed. So my midterm target for the end to blue 3 is 88.18, and that may be a bit low, it may end up being a bit higher, and that's where blue 3 would reach 1.618 the length of 1. We'll have confirmation that intermediate wave 3 is underway when it moves beyond the end of intermediate 1 above 88.708, and my target for the mid to long term, a few months, possibly up to a year away for black wave 3 is 99.16. Taking you now to an hourly chart, where we're going to look at this last piece of movement, where this blue 2 and pink Y is this point down here, and I had an upwards target of 80.669 to 80.958 for the end to orange wave 3 and the beginning of orange wave 4. Upwards movement was exceeded by 0.129 above that target, so that target was exceeded, and green and orange wave 3 has ended up here at 81.087. This third wave at orange degree ending here and starting here is 0.226 longer than 2.618 the length of orange wave 1. So there is a reasonable Fibonacci ratio between those two. Within orange wave 3, purple wave 3 here is just 0.03 longer than 1.618 the length of purple wave 1, and purple wave 5 is just 0.006 longer than equality with purple wave 3. So 3 and 5 pretty close to equal, and they both have a Fibonacci ratio to wave 1. It's a remarkably good relationship within this third wave at orange degree, giving me a bit of confidence that at least for this part of the wave count, that looks pretty correct. That's a pretty typical looking impulse there with some good ratios. Thereafter, this fourth wave at orange degree failed to reach to the lower end of the trend channel that I had drawn on my last analysis, so I've redrawn this channel. And it was pretty brief and shallow, ending around about the fourth wave of one lesser degree, which is pretty common for a fourth wave. Thereafter, we've seen new highs from the dollar and another five-wave structure developing to the upside. This should be orange wave 5 according to this labelling, and a target for it to end is 81.445, where this orange fifth wave will reach equality with wave 1, which would be the most commonly expected relationship between the two when the third wave has such a nice long extension in it. So that's a fairly high probability target. We should expect Monday's trading session to open with further upwards movement for the dollar round about to this point, and as soon as we can see a satisfactory five-wave structure from this point down here on upwards, and looking at this on a 15-minute chart, we could almost see that, so technically speaking it could almost be over, and the target's not that further up. At that stage we should be looking out for a larger correction than we've seen for the last few days from the dollar. Wave 2 green to correct all of wave 1 green may technically move right down to the start of wave 1 at 78.775, but it may not move below. Because this is within a third wave of a third wave at primary degree, we should reasonably expect corrections to be a bit shallower and briefer than usual, and we may expect the second wave correction to be a shallow correction, possibly reaching down to the fourth wave of one lesser degree around about 80.051. When we have an end to this fifth wave, orange degree, and finally an end to wave 1 green, we may draw a Fibonacci retracement from the high to the start of wave 1 down here and look out for the shallower, perhaps a 0.382 ratio, and possibly down to the 0.5 as possible targets for downwards movement. And if one coincides with this fourth wave of one lesser degree, that may have a higher probability than the others. When this correction is over and we can see a satisfactory corrective structure, a three-wave structure to the downside, we'll then look out for another trend change and further upwards movement from the dollar. When I know the end to 2, I'll calculate a target for 3 green for you. We're not there yet though. So we should be expecting a little bit further upwards movement from the dollar to start Monday's trading session, but look out for a correction that can move right down to the start of that, although it's highly unlikely it's going to be such a deep correction. There will be a correction coming up probably earlier next week that may take a whole session and maybe 2 sessions to complete. Thereafter we should again see further strong, very strong upwards movement from the dollar. Overall the trend is now up. That's all from me with your US dollar index analysis, and I hope this helps you in your trading.